So good morning, good afternoon, good evening traders wherever in the world. Victorfx here. In today's video, we're going to be looking at supply and demand. Okay, so we're going to be looking at supply and demand, the intro, weird forms of supply and demand, distribution and accumulation. Can supply and demand be used for entries in Forex? Supply and demand coupled with the Dow theory so that you learn how to trade structurally using supply and demand instead of picking random supply and demand areas. And then we're going to be looking at the full trading system, which can be utilized to supply and demand, and then the Dow theory on higher time frames. Okay, so we're going to first of all start off. Now, theoretically, you could say supply and demand in any field of study. If you're looking at demand, you're looking at a scarcity of a particular object. Okay, for example, if we say there's a lack in laptops, you can obviously expect that there should be a higher demand of the laptop, and then the price of it should rally higher and higher in any way or random form. And then if there is a lack of it and there's too much suppliers, you expect the value to be degrading slowly. So the demand should always be looking for higher prices, and then supply should be looking for lower prices when you're trading. So I've gone ahead to mark out a few of the types of supply and demand we have. I'm first of all going to be looking at the demand. Now the first one is, there are a lot of ones, but you just have to wrap your head around the concept. Now you can see a rally, a base, and a rally. This is when price or candles are bullish, and then come in the middle of the range and give stagnation before moving higher. So the expectation is when price come back to this zone, we are going to look for some sort of buys in order to go higher and higher and higher. Okay, now the other type of demand we have is the drop, the base, and the rally. And then there are a lot of candles in the middle here, which you expect once price comes back to this zone is gonna go higher. So like an expectation, so on and so on. And then the supply is the exact opposite. You've got a drop in candles or price, and then a stagnation in the middle, and then a drop. So this is called the base, and we expect once price comes into this zone, it drops off lower and lower, and this can happen on any given time frame. That's why we expect, or we teach, that price is fractal in its delivery. So looking at this other type of supply, you can see a rally, a base in the middle, and a drop. So we expect once price plays around, when it comes to this zone, it should go lower and lower and lower. And that is the full concept of supply and demand. Okay, now I'm going to show you real life examples so you'll be able to wrap your head around it. Now I've marked out a few supply and demand zones on this random price action on a daily time frame on the Euro USD, just to show you that okay, this happens on every single time frame. You could do this on the seconds time frame, on the 1 minute time frame, or even the 5 minutes time frame. Now you can see this price right here. There was a rally here, a stagnation in price right here. Let me zoom in properly on that. You can see there was a rally here, a stagnation in form of 1, 2, 3, 4 candles, and then a rally once more. And then what happens when price came back to this zone? You can see price played out around it like once or twice. Now a lot of people want to teach this, that oh, this is resistance and so on, but the way we like to understand price is always playing around between supply and demand zones, not specifically one block that is going to be a resistance and then price just rejects off of it forever. We don't believe in those concepts or trend lines and so on. So you can see the rally here. Let me show you that, or let's use this, the highlighter. The rally here, the stagnation in form of the base, the rally once more, and then once price came into this zone, it rejected and rejected once more. Okay, easy enough. Hope no one was confused on that. And we'll look at another similar example here. Now this is the demand zone right here, and you can see how price easily rallied up here, gave a demand here. It was stagnant for a bit and then went higher. So this zone in on its own is our demand zone. So expect when price comes back into this zone, you can see even a long wick here, but at the end of the day, this zone held and took price higher. So even if this zone is touched a million times, once it rallies up, you know, okay, this is a valid demand level. Okay, it's not going to hold. Every single supply and demand is not going to hold. If not, the market will be easily readable by everybody, and everybody will be millionaires off of the Forex market. Now I've looked at two types of demand here. Okay, we're just looking at the first type of demand so far, which is the rally, the base, and the rally, which is what I marked up here, this stuff here. And if you're confused about my candles, please, the gray candles are for buys, the black candles are for sells. and so on and so forth. So we'll be looking at this type of demand right here, which is what? The rally, the base, and the rally. Okay, so hope no one is confused. If by the end of this video you don't understand anything, you could go ahead and click the comment section, type whatever you want to type, and let me know what you think. Okay, I like to get feedbacks on every single one of my videos. Now you can see this second example here. We're having a rally right here, a rally up. I don't like this color. Let me see if I can change that. Or let's use even a blue is better at the end of the day. And then let's make this line a little thicker so you could see what I'm drawing out. Okay, perfect. Now you can see here we've got a rally up here, and then we'll see stagnation in price, a base here in form of these candles. Okay, and then what? A rally once more, going lower and lower. Okay, so this point or this zone, you could also mark out this full middle stagnation right here if you want, but at the end of the day, once you learn to refine, you know that okay, the zone is probably this way. And I'm also going to talk in this video about wicks. These are wicks. You can see these small rejections in price right here. Let me zoom in on that. It's a wick. Wicks can also be its own supply zone. Sorry about the airplane noise. You can't control these things. So this type of supply zone, hope you can hear me, hopefully. This type of supply zone is the what? The rally, the base, and the rally. Okay, supply zone. Let me show you the image of that. We'll click on this. You can clearly see this here. The rally, the base, and the rally lower. Horrible drawing, but you get the point. So you can clearly see once price came back into this zone right here marked out, you can see price was just rejecting this zone until it broke down and went lower. Okay, perfect. Now you can see another example here of a supply zone which relates to price going what? Lower. I said supply zone leads to lower prices, demand zone leads to higher prices. Easy as ABC. Now you can see there was a drop here. Oh, let's use our magical crayon. A drop here. Price hesitated for a while and then came down lower. Now one thing you need to understand, one candle can be a base and 4 candles can still be a base. So it's not about the number of candles, it's about the concept. As you get to mark out supply and demand zones, you get better understanding. Don't rush the process. Now this is what? A drop, and this is the base before the drop, and then this is a drop, base, drop. Here we got what? Sorry, let's zoom out on that, and then we got what? This drop, the base, drop, and this is what? A supply zone, valid supply zone, valid. Okay, so you can see how this zone got rejected and price went on lower and lower and lower. And then the final type of demand zone is what is marked up here. You can clearly see we've got this zone right here, where price has been going lower and lower and lower, and then price came here after this drop, the base, rally. Look at it one more time. The drop, the base, the rally. And then you expect once price is coming back into the zone, you expect price to give a bullish kind of perspective on this. So after looking at this stuff right here, you could clearly see that price came back slowly but steadily, and then what? Took higher. Now there's one thing I need you to understand right here. Okay, there's supply and demand every single part of the market, every single place, every single day. Supply and demand is formed in the market. Now you can see we've got this trade, play lower, give a base, a drop, a base drop. So this zone even here, this zone I'm also highlighting here is also a, okay, this zone I'm highlighting here this way is also a supply zone. Okay, so not every supply zone is going to hold, and clearly not every demand zone is going to hold, else we would all be millionaires, as I just stated. Okay, so once more, let's look at this on a clear pace, and you can see this supply zone, this demand zone I marked up here has a lot of candles in it, and I'm going to show you a variation where it doesn't have a lot of candles, but at the end of the day it is still a valid demand zone. Now you can see this huge rally here, rally, and then you can see this base and then what, rally, as denoted here. And you can see the base is made up of 1, 2, 3, 4 candles, but you could get the point that around this zone is where we should be expecting reversal of the market because of what the market has done. You can mark out this full place as your demand zone, it doesn't matter, it's still accurate. Okay, so you can see I ended up marking up every single demand zone we had, which was comprised of, this was a drop, base, rally. Does that sound familiar? Yeah, drop, base, rally, familiar, nice. And then this was once another drop, base, rally. Now this does not mean that every single time price is going to come down and move higher. No, not gonna happen, never gonna happen. You're never gonna see perfect delivery like that, but at the end of the day we keep on doing the same thing. Now you can see price was going higher. You can at the end of the day keep marking out demand zones where you see what, a drop, a base, and a rally. You can keep marking them out. It's not every time it's gonna hold. At the end of the day, you just need to understand the concept, and then you can apply higher time frame Dow theory to get perfect entries at the end of the day. So you can see I gave you a few examples. Go on your charts, mark up these things, post it on Instagram, wherever. Make sure you're getting your eyes used to it, or better still, watch more videos and learn more and keep developing yourself as a beginner. Okay, so you can clearly see I've marked up a lot of supply and demand. Let's go back to our agenda so we don't go off point. Now we've looked at what supply and demand. I believe everybody understands what supply and demand is. Now I'm going to be looking at the weird forms of supply and demand. Okay, let's underline that, weird forms of supply and demand. So that's what we're going to be looking at next. Now I've got a part, a line up here which says wicks can be supply. Okay, so this wick rejection, you can see the single line here on a candle is a wick. It can also be supply and demand, and then you can see I gave 2 examples here, and then you can see this stuff here is also what, supply and demand. Okay, so since this is an in-depth video, we're going to be looking at what we mean by wicks, supply and demand. Now I'm going to look for a perfect example, something undisputable. Is there anything too perfect? Nice. Now you can see this wick here, you can see this price action here, this stuff here is a wick. Yeah, so it's a perfect supply and demand. Why? Because we got here, what do we have here? A rally. This wick here in on its own is a base, and then whatever we have here is what, a rally downwards. So if we're expecting price to come back into the zone and go lower, you could easily look at that as what, your supply zone. Now why do I say the wick is a supply zone? Let's go to a lower time frame. So in this case, you're going to get a lower time frame point of view on this stuff. So I mark it out this way. We are currently on the daily time frame, so I'm just going to take it down to the 4-hour time frame, so we'll see what is happening in that zone. Perfect. Now you can see what the wick is now looking like. It's not like a straight line anymore. You can see our wick no longer looks like this stuff right here. Oh, let me zoom in on that, please. Our wick is not like this. The gray area, you can clearly see that it's made up of what, candles, which is letting us know that okay, that's a base, okay, before the drop off. So that is a valid demand zone. Relatively the same thing is happening here. You can see this wick here, and if we go lower on lower time frames, you discover that oh, it's no longer a wick, is what, price action. So obviously the wick is what, a demand zone. Okay, perfect. Now we're going to look at the other type of demand. You just have to take notes on this. You don't need to stress yourself on, oh, how is this concept or whatever. You don't have to do that. Just stick to what I'm showing you, and hopefully you get an insight on it. So the other stuff there, you can see this is a candle. This might be a candle on a higher time frame, so this might be a 1-hour candle. And then what you would find is when you go from the 1 hour to maybe the 5 minutes, this middle, okay, this week where these both weeks meet, you're gonna see a lot of price action on the lower time frame, which is what, also a demand zone. So I encourage you to do that for yourself, and then let me know your results when you're done with that. Okay, So if we zoom back out to our daily agenda, you can see we are finally done with these weird forms of supply and demand, just using time frames to what note that weeks on their own are what supply zones and so on and so forth. So we're going to be looking at distributions and accumulations. Okay. Beautiful. So if we zoom out of this beautiful price action, you could clearly see that what we are moving lower and lower and lower and lower on this euro USD for a long time, a long time. So if you look at this zone, you can clearly see a very nice supply zone. You can see here price pushed down, a very strong down, and you expect this top of this range to be what a supply zone because it sponsored this price lower. So this zone here is a very valid what supply zone. So if I go to that place where we just marked out and I use a box, okay, I box it up this way, and then I go down to the 1 hour. Hopefully TradingView allows me to do that, because sometimes they don't allow you to go that back in time. So if I go back, if I can find that zone, you go back to the 1 hour, you can see it's not just a single point where it just went high, did a little stuff and went down. You can clearly see that there was a price action in here. Price was also making us believe that, oh, we are bullish. It kept doing that until it finally invalidated whatever it did here. So price played around the zone. So this is what we call, generally we call this a distribution, where price plays around higher and then goes lower, and high points, making a lot of traders on a lower time frame think that this is what bullish price action and then going what lower. And the reverse is the case for demand zones, where you can see demand zones pushing lower, giving a form of accumulation, and what going higher. So that being explained, you could see the reason why this is a very valid distribution. You can go and study that for yourself. I don't really look at Wyckoff that in depth as a lot of smart money traders do, so you could clearly do that for yourself. And also the same thing for accumulation. This also sponsored price higher, so it's kind of an accumulation. You can see why price rejected it a little bit before going higher and higher and higher. Okay, so that being said, we look at the next thing after discussing supply and demand. You can see we're looking at, can supply and demand be used for entries? Yes, it can be used for entries. Okay, it can be used for entry. So before we go into that, we're going to be looking at supply and demand coupled with the Dow theory. Now, a lot of traders just go onto the charts. So maybe they are on the 1 minute time frame. Okay, let's go there. Maybe they're on the 1 minute time frame, and then you can clearly see choppy price action, and somebody will just draw out this and call it a supply zone. And I'm not saying it's a wrong supply zone. I've not even analyzed the market, but at the end of the day, they just look at this zone, and then the next thing, they've put their profit and loss to price has been going down. This supply zone should hold without any backing for this. Okay, now this is very wrong, and if you do this, you're gonna have a very low win rate with supply and demand, and you're going to call supply and demand a scam and prefer using your RSI, which will actually be worse. So in this case, we are going to be looking at why you should not just trade supply and demand, because supply and demand zones fail every day, every minute, every second, every time, and they are not that reliable. Okay, you can clearly see. So if we are looking at the overall bias for this market for the past months, I mean a lot of months, you can clearly see, even a toddler, a child will tell you this is going down, and then I don't know the Einstein that's going to tell you, oh, it's going to be going up, because this is on the 4 hour. So if price is going down, you should be looking for supply zones. Okay, once more, if price is going down, you should be looking for supply zones. If price is going up, okay, you should be looking for demand zones to be what met. And just by doing this, you might get liquidated once or twice, but just by doing this on this overall bullish market, you're gonna get more wins, and you're gonna get higher win rate or risk to reward by following the predominant market structure. So the Dow theory is just the higher highs and higher lows, which I believe a lot of you have learned. If you've not learned it, watch more videos on this channel. I think I broke it down on this channel, and you should be able to learn how to do that. Okay, now yes, so I'm going to use the replay to put it right here, and then I'm just going to give a fast in-depth. So right now you can see we've got this zone here is our supply zone. Okay, and then if we play price a lot faster, you can see how the price is just reacting. Okay, this is gonna take a lot of time. Let's go on the daily. This is really slow, my man, too slow for my liking. 1D, can we get this play out faster? I know the attention span of YouTube video viewers is very short, so actually that's why I talk a lot faster, and I like to do this a lot faster before you lose your attention. I mean, it's frustrating. You want to learn trading and can't even give time to learning. I mean, good luck. So you could clearly see what price did here. This zone sponsored this lower. By the end of the day, these zones never came back. Price never came back to it. We draw out this zone, and then what can you see? Price never came back to it, and then break down once more, and there's another supply zone. So this is how you can keep drawing out supply zones. By the end of the day, the strongest supply zones are the ones that are what? Higher. Okay, so you have to build an edge around supply zones. This is not the video for it. I'm just gonna try to give you an example. So let's try and put a sell right here. So we are looking for price to come back into this supply zone, and then what? Continue going lower. Since the price has been what? Going lower, and even if you are using Dow theory, you can clearly see that this was a bullish market. Wow, this was a bullish market. What? Turned bearish by breaking this low here. So at the end of the day, this is a value setup. This is if you want to just start trading supply and demand off of the back without any refinement. It is possible and it is doable, but will I advise you to do that? Clearly I don't really see it as the best trading strategy. Okay, so you can see it will never got tapped in, but price broke down lower, which means it gave us another supply zone right here, which means we would have gotten another entry short here. Remember, this is the daily time frame, so each candle here is about 1 day, and then you can see the risk reward you would have gotten if you are not a scalper like me or the rest. So price breaks down one more time. You can see I've not even marked this out, but this supply zone presented itself. You do what? You put a sell right here. Just for backtesting purposes and for looking at price action playing out, you can keep doing this. Keep looking at supply and demand zones so you get used to it. So the losers are going to be a lot more as compared to the winners if you keep doing this strategy. So you just have to keep looking at the charts, so on and so forth. So you can see the supply and demand in this market is predominantly bearish, which means the market has been pushing down for a couple of months, and then you should easily be looking for long positions, for long-term positions to be short instead of looking to buy the market. Supply and demand, there are a lot of supply and demand zones all around every single place in the market, so it's not really the right strategy. You just have to identify a supply zone, allow price to come back into that supply zone, and then what? Confirm. So confirmation, check the link in the description. It's my link to my Telegram. I got hacked recently, but it's back on. Okay, I think we have like 1 member there, so once I see like 5 members, I'll start posting outlooks on charts, and then personally you'll be looking at how I trade and how I use my strategy. So supply and demand with Dow theory, you get the understanding. If price is bullish, you should look for demand zones to be met. If price is bearish, you should look for supply zones to be met. Simple, and don't overcomplicate things by looking at too many things. So the Dow theory is here, and I just show you an entry using the supply zone, which I told you is not personally my best advice to anyone to just place an order off of a supply zone. It's really not going to make sense. Just for now, watch how supply zones form, break structure, and keep maintaining the overall market structure while trading. So finally, full trading system only using supply and demand, just like I said, it's really not the best approach if you really want to be a professional trader. You have to study internal market structure. So for example, you could see this supply zone here. Why is this zone a supply zone? You can see it barely got tapped, but it got tapped at the end of the day. Why is the supply zone? ABC, drop, base, drop. Okay, so you can see why it's a supply zone. You should study price when price is coming back into the zone. So if I go take this now to like the 2 hours, you can now see price is a lot more defined and there's a lot more noise going on in this market, a lot more wigglish and stuff. Don't worry too much about it. This is in the intermediary structure, and this is the proper structure. Dow theory, higher highs and higher highs, higher highs and higher lows, lower highs and lower lows, and so on and so forth. So a trading system can be built off of supply and demand, but not necessarily is it going to be highly accurate if you just go off of basic elementary supply and demand, looking at drop based drops, rally based rallies, because supply zones usually invalidate demand zones invalidate supply zones, and vice versa. Hopefully this video was a little bit enlightening for the viewers, and you basically could able to wrap your head around supply and demand zones. Now, one more thing I'm going to tell you is, if you listen to me for 4 hours and you don't go ahead, go into your charts to mark up anything, you have just wasted let's say the past 20 minutes or so listening to me and not taking action, and at the end of the day you are not going to see any form of profitability. So go back to your charts, mark out the supply zones, mark out the demand zones, make a couple mistakes, check YouTube and so on, and get more insights on how to trade supply and demand zones. So personally, I like to confirm my zones. I'm a smart money trader. I will catch high RRs and so on. I know a lot of people are going to be like, oh, how is it possible, and so on and so forth, but once you get the understanding and then the trading psychology, you can be able to get to the level of trading and without FOMO, without fear, following your trading plan, being consistent and disciplined, and so on. So this is a basic starting plan